So you're paying to buy this crap. You're paying for them to service this crap. They have no skin in the game. It's all you. And when this crap defaults, who eats it? You do. Well, I don't own any of it. In gold and silver, I trust. I hold it. I own it outright. Period. I mean, truthfully, it is that simple. That's game over. Because once that veil is lifted from your face and your eyes, you see the truth.
In this segment from Lynette Zhang's video, she exposes the risks of asset-backed securities and the importance of personal ownership, emphasizing tangible assets like gold and silver. Remember that financial awareness is the key to secure futures. Stay informed about crucial topics, protect your assets, and make informed decisions in an ever-changing financial landscape. Your financial well-being matters, and knowledge is your greatest asset. Stay tuned to learn more about these crucial economic conditions.
You need to know so that you can get into position to not just weather this storm, but actually benefit from it. Because the markets are schizophrenic. One day they like what's happening, so woo, there's euphoria. Markets are up at all new time highs, high PEs, etc. But then the reality sets in, and then they try and dump, and then they got to keep them supported again. Because what do people do? They open up their 401k statement or their IRA statement and they go, oh, okay, things must be okay as long as the stock market is okay, or as long as the bond market isn't too terribly bad. But look at all of these industries. Oops, let me grab a laser pointer. Look at all of these industries with the most distressed debt. That means they're already having trouble paying their debt. Other, which they're not specific about here, is the largest area. Real estate, telecommunications, retail, software and services, healthcare, and pharma. There is a lot of corporate debt that is in deep due. At the end of the week, marked by optimism, the Fed would be closer to ending its interest rate hikes. And aren't they coming out and talking about, well, the Fed's at the end of the road, probably at the end of the road. Maybe we'll get one more. Maybe we won't. Maybe it'll be a soft landing. Hey, maybe we'll avoid recession. That is such garbage. Look at this. Don't believe their lies anymore. Because how many times can you be lied to when you do not know the truth? Every single flipping time. So how do you think if they're going to fight the inflation that they created, sorry, Randy, fight the inflation that they created, how are they doing that? By raising the interest rates. I personally think we're going to see a pivot at some point, but I can't tell you when. Is there going to be another rate raise? Well, yeah, they're trying to get back their credibility. Remember when they gave it up last June? Not last June, a year ago last June? I was amazed that they were so stupid to give it up. And it includes CLOs, collateralized loan obligations, which the Bank for International Settlements have talked about. But all of these commercial mortgage-backed securities, investor-driven, private government agency insurance. So these are all the entities that invest in commercial property loans that are maturing, that you buy these products. And they're put in your IRAs, your pensions. It's those institutional investors that invest your money. That's your skin in the game, not theirs. They're just making money from it. And then the last three, International Bank, which is this dark blue, the medium blue is the national bank, and then the light blue are the regional banks. So I just kind of singled those out. Because one of the things that I want to point out to you is that while, absolutely 100%, the regional banks are very exposed, and that creates some problems too because they're not lending. It's getting tighter, but it's getting tighter in the entire banking sector. Something very nasty this way comes. And this could certainly pose a problem for an economy that is driven by constantly compounding debt, whether it's corporate debt, government debt, or consumer debt. We're at the end. The game is over. The jig is up. Rising consumer pain triggers Wall Street concern. Well, why in the world would Wall Street be so concerned about Credit Weekly, about rising consumer pain? There's always a consumer has plenty of money. Isn't that what they're telling us? Still have lots of savings. Don't worry, they'll keep spending. Yeah, well, inflation's been eating away at the pandemic savings buffer. It's gone. And in fact, the savings rate is lower than it was prior to the pandemic. Oh, the job market is key. It's key. Now, the Fed is trying to reduce the employed number of people, but the job market is key and unemployment is still low. But when it starts going up, it'll be quick. We'll soon see consumer pain spilling into Wall Street because so much of this debt has been turned into those Wall Street products. How much of it? Well, we'll look at a couple of them. Now, remember, when interest rates were lower or going down, then the principal value would go up. So if there were some defaults, that could hide that. But we're in the opposite trajectory now. Interest rates are going up, which means the value of all those loans are going down, the market value is, but also then compound that with default rates going up, and you have a market value that's in the toilet. And very well may. Some bonds tied to car loans made by U.S. Auto Sales and American Car Center veered into distress in recent weeks after borrowers fell behind on payments. Citigroup believes that some of the riskiest parts of those asset-backed securities, what is the asset that's backing them? Your promise to pay, could fail to return principal to investors. So you're paying to buy this crap. You're paying for them to service this crap. They have no skin in the game. It's all you. And when this crap defaults, who eats it? You do. Why? I don't own any of it. None. In gold and silver, I trust. I hold it. I own it outright. Period. I mean, truthfully, it is that simple. So when you notice this, that's the Ponzi scheme being revealed. That's game over. Because once that veil is lifted from your face and your eyes, you see the truth. When you look at the spot gold market and how that keeps pace with the rising U.S. debt. This gold line is the spot market. This goes back to 1970 and takes us through 2023. And you can see that once people realize it and once that cup formation is fully broken, it goes up to new levels. But this is the manipulated spot market. It doesn't really reflect what's happening in the physical only market. And I've shown you those graphs a million times, and we'll probably show you a million more so that you know the truth. But physical gold in your possession, this is my savings, right? There's no debt attached to this. There's no counterparty risk attached to this. What's this stuff? It's debt. It is a Federal Reserve note. A note is a debt instrument. It's borrowed into existence. Its value, its purchasing power value, I think I'm done, but its purchasing power value has been reduced via all this debt. Because every time they create new money, the value of what's already out there is lost. So what are you going to do about it? We all know that a rising gold price indicates a failing fiat currency. Open your eyes. The currency is failing. Look at the purchasing power charts, which I didn't put in here, but I've shown you a million times. It's my favorite chart. It's going to zero, just like over 4,800. Look, there's over 4,800 currencies that do not exist anymore, including the gold certificate, the silver certificate, Central Bank of Iran, right? This is nothing. The government says this is money. Guess what? They can also say it's no longer money, but the markets can also say it by design. They're designed to go to zero.
In wrapping up this enlightening segment with Lynette Zhang, we've explored the intricacies of asset-backed securities, the importance of tangible asset ownership, and the potential pitfalls of financial schemes. As we navigate a complex financial world, staying informed is your greatest ally. Subscribe now to stay ahead of the curve, safeguard your financial interests, and make sound decisions. Your journey towards financial empowerment begins with us. Subscribe today and take control of your financial future. Thank you.